Welcome to Clear Conversations, Entrepreneurial Legacies with your host, John Sleeting, an executive partner for Clearwater Capital Partners. Join John and his guests on this exclusive journey behind the scenes of extraordinary entrepreneurial families. In this series, we will dive deep into the stories of John's guests, who generously unveil the paths they've walked, the challenges they've overcome, and the wisdom they've gained along the way. Throughout these conversations, we explore their achievements beyond mere recognition, disclosing the distinctive perspectives that have shaped their entrepreneurial journeys. We hope you enjoy.
Welcome to Clear Conversations, the Entrepreneurial Legacy series. I'm John Sleeting, your host, and today I'm joined by Dave Meyer. Dave is the president of CFM Insurance, located in the northwest suburbs of Chicago, Illinois. Dave is a third-generation family member, part of a business that was founded by his grandfather in 1929. Yes, pause and remember that year, 1929, a pretty tough year in our world economy to start a new enterprise. And here we are coming up on 100 years in the family, and it's continuing to grow and thrive and be strong under Dave's leadership. We'll talk about the family dynamics for entrepreneurs, the building of legacy and what that means way beyond years passing in the business. And we'll also talk about the families that they serve, coming alongside other entrepreneurs to manage their risks within the totality of their wealth management picture. So I'm delighted to be joined by Dave, and let's get started. Dave, thank you so much for engaging in this conversation today. We've known each other for, 10, 15, maybe longer in terms of the time together. But sitting down to talk more in depth, really on two paths. When I look back, your family business, you are third generation leading it. You're going to celebrate the 95th birthday next year for when your grandfather founded the business. That's right. Coming up on the century mark here pretty quickly. And then also how you serve other entrepreneurs. So you have your own third generation story of what does that mean within an entrepreneurial family and the family business, and how you're processing and do things to lead it. And then also how you're working with others, because a lot of clientele that you serve, that we serve together, you take the approach with respect to risk transference through insurance solutions. So I think there's two different dimensions that we can dive into right out of the gate. Great. But first, could you give our listeners a little bit of an overview of who is CFM Insurance?
Yeah. Well, thanks for being here. I appreciate the opportunity. Can't wait to dive in. So I run an independent insurance agency here in the northwest suburbs that was started back in 1929 by my grandfather. So yeah, you're right. And this coming year, we'll turn 95 years old, which is crazy. My grandfather died from a massive heart attack. My dad keeps reminding me this business will do that to you. Back in 1971, my dad took the agency over from him. My dad had been working with my grandpa for a couple of years when that happened. My dad retired at the end of 2011. Third generation family owned company. Love what we do. We have four divisions to our organization. Personal lines, which is your auto, home, umbrella, boats, motorcycles, all that fun stuff. Commercial lines, which is the business insurance, employee benefits, and then specialty products, which gets into your traditional life and disability benefits, as well as some kind of crazy, unique stuff like failure to survive insurance, things like that. We can dive into that if you'd like. I grew up in the business. Always knew what I wanted to do. I knew from a very early age that I wanted to work with my dad.
Yeah. Before we dive into the family side of it, because this is where I want to begin. I know there's a lot of listeners when they hear insurance, they're like, here we go. Yeah. We joked about it in preparation. No one likes to pay a premium. No one wants to do that. And yet it's a necessary tool. When we think about multifamily office services, and there's 10 categories. I've had a session before on investment and portfolio management and how individuals invest across the entrepreneurial life cycle. There's wealth planning and transfer strategies. There's philanthropic strategies. So as we work through those, risk transference is one of the 10 specialty areas that comes into play because everyone needs it. no one likes it, and no one likes paying the premium. So let's call it what it is. And yet there's so much value that can be added back to the individuals and the people that you're serving too. Yeah. How do you overcome that initial reaction from people when you talk?
Well, I do wish that our business was a little sexier. When you think about consuming, like when you go to buy a car as a consumer, right? Like there's this excitement factor, right? Like, hey, I go and I sit in it and I smell new leather and I get to test ride it, and then I get this new shiny thing and I bring it home and I'm really excited about it. I paid a lot of money for it, but I never complain about what I paid for it because I'm excited about what I bought. Right?
And you still might not like the process, but you like the end product that you get out of it.
You're happy with the end result. I've never really felt like insurance is that way necessarily. I feel like we sell people a really expensive piece of paper, and both us
and you hope they never use it.
And both us and the client hope we never have to use it. Right. And so it's not real sexy. So I do feel like I feel resentful towards the car salesman, because I feel like in some ways their job's more exciting than mine. But and you use the term risk transference, and I would even maybe push back a little bit on that. I would argue that what we do isn't even really risk transference. It's really more risk finance. Because in insurance, you can never really transfer 100% of the risk, right? There's exclusions in policies. There's things that aren't covered by policies. There's limits on policies. And so, we can never really effectively transfer 100% of the risk. Okay. What we do is we help finance the risk. So, so what an insurance policy does is you pay a premium to finance that risk, whether it's your homeowner's insurance or your auto insurance or your health insurance or whatever it might be. So what we typically do is we help people finance risk.
Yeah. And again, hopefully they don't use it, but when they do need it, that you step into and help individuals work through that. So we're going to come back to a bit more of the technical aspect of what does that mean, right? And what entrepreneurs should be thinking about in terms of that risk transference. But to start with the family, because if we think about entrepreneurial legacies, and we think about what your grandfather started going on 95 years ago, how do you think about legacy, right? How do you think about the legacy of your grandfather, your dad, you growing up in it, the legacy you're writing for yourself as you do this?
Well, I'm a homo guy. My grandfather was quite an entrepreneur. So he was working at the time, this is 1929, what a year to start a business, right?
Yeah.
So was working at the time for a life insurance company down at the Insurance Exchange Building, downtown Chicago. And he met a guy at a lunch break one day, and they struck up a friendship, and they just started talking over lunch, and they kind of came to this conclusion, like, hey, we're working really hard, but we're working for somebody else. Like, why don't we go to work for ourselves? And so what they did is they started their own business in that building. So they were working up on, the 11th floor, and they rented a little office down on the 9th floor. And so they'd go work their day jobs, and then, on their lunch break, run down to their office and make some phone calls and try to sell some insurance. And so, so my grandfather was a real entrepreneur. So he started the business, he grew the business, brought in some partners, and that sort of encumbered the business a little bit because we had other equity partners in the business. And so when my grandpa died and my dad took over, my dad's quick to remind me that the business wasn't in that great of a shape. We weren't all that profitable, and we had some structure issues and some management issues. And so, my dad took over, and my dad is, I look up to my dad more than most people that I know. He's a very, very wise guy, and I love my dad. And so he just rolled up his sleeves. He's like, hey, we got to turn this thing around, and we got to part with some of these people, and we got to buy some people out, and we got to get out of this, and we got to get into this. And so my dad really pivoted the business in 1971.
And you were, just a few years old at that point in time, right?
Yeah, exactly. Yeah. But I remember being in the office, back in those days, and being kind of enamored with what was going on around there and wanting to be a part of that. So that was kind of a cool thing.
So you shared a story, when we were preparing for, coming into this dialogue about that really early on, knowing that this is a business I want to be a part of.
Yeah.
But walk the listeners through a little bit of the stories of like your earliest recollections of saying, yeah, this is the path. I want to be part of the family business.
Yeah. So I'm realizing the older I get how unique this is, but I've known since I was a child what I've wanted to do. Ever since 5 or 6 years old, I knew I wanted to go to work with my dad. And I was fortunate enough to get an opportunity. But, before all that, I just remember running around the office as a kid. And you remember the old, as a matter of fact, I was going to take a picture to bring it to show you, but, the old check writing machines, where you kind of punch in on a manual piece of machinery, the dollars and the cents of a check, and you'd slide check stock into that. You'd pull a lever and it would, print in ink. I remember being able to play with machines like that, and like, this is what I want to do.
Literally print money.
Literally print money. Right. So anyway, so yeah, we played around there a bunch, my sister and I just knew what I wanted to do. And so growing up, I never had this tension. I went to school with so many kids who are like, I just don't know what to do. I don't know what I want to do. And I never struggled with that. I never felt like I had to find what I wanted to do. I always kind of knew what I wanted to do. So
in two siblings, you and your sister, is there, right? And so as you were growing up, was she feeling the same way about, possibly being in the business herself between the two of you with your dad?
Well, I think she maybe did up to one point. I remember one summer my dad hired her as a receptionist, and I love my sister. She's 3 years younger than I am. And
she's listening too, by the way, right? So yes,
right. My dad hired her 1 year as a receptionist, and I think she lasted 2 weeks. My dad fired her one day because she was taking 3.5-hour lunch breaks with her friends, not answering phones. And so my dad's like, "You're out." But but my entry to the business was very similar to that. My dad told me at a very young age, like, "Hey, there'll be an opportunity someday, but you're not going to take a job from me out of college. You're going to go get a job out of school, be trained and educated by somebody else, send a message to everybody here in this office that you don't need a job from your dad." And so I knew that was going to be the case. So when I graduated, I took a job downtown as an underwriter for an insurance company. Went through their corporate training, employee development program, and was just waiting for that phone call like, "Hey, when would a job open up at CFM Insurance?" Right. And so it did. And my dad said, "Hey, I've got an opening for you." And I'm like, "Great. What is it? I can't wait. Let's go." And he's like, "The receptionist position." And I'm like, "You gotta be kidding me." And he's like, "No." He's like, "And hey, here's the deal. Like, you've got to do a good job in that role. And, the only way you're going to get into the next role is if you do a really good job in this role." And so it kind of started me there and then moved me into personal lines. And I was taking care of policyholders, with their auto and home insurance and trying to provide customer service, moved me into commercial lines and then into sales. And that was over a multi-year period. But, and then I'll never forget. So this is shortly after my wife or after Sherry and I were married. We were celebrating Christmas together. And I got a Christmas gift from my parents, and it was this box, it was about this big, and, and it had some weight to it. And I've always been able to guess what the gifts are, right? It's like,
but it's a small box, right? Small box, 3-4 inches.
What is this? And I open it up, and it was a new business card.
And
it said, the new CFM business card said vice president. So my dad had given me a promotion, from a sales role to an executive role, which I still remained in sales, but that was the best gift I ever got.
Yeah.
I just remember that.
Now, did your grandfather take the same approach with your dad when he came in? I mean, he come straight into the business, or did he have to go off for a period of time and, prove himself elsewhere before coming into the business?
Yeah, it's a good question. I don't know if I know the full answer, but, my dad didn't really work with my grandpa that long. So I was born in 67 and, my grandpa died in 71. So, my parents had me at a really young age. They had only been married for a year, something like that, a little over a year. So my dad was only working with my grandpa a handful of years before he passed away.
Okay.
So my dad kind of came in at an entry level, was working as a customer service representative, kind of like I started, and then was just thrown this big curveball. Like, the founder of the company's dead, and then you've got to
Yeah.
take over. So it was more probably tyranny of the urgent, right? Like,
Yeah.
it wasn't really a pathway. It was just sink or swim.
Yeah,
at
you
that
have
point.
to take it over.
Yeah.
Well, I think, and the exact statistic is something like less than 4% of family businesses make it to the third generation.
Yeah.
Right. So, I mean, that's a really low probability that you have that kind of succession that takes place. And there's all different ways, right? Why did it not work? Right.
Yep.
What fell apart? What didn't happen? What was macro changes in economy or innovation, versus maybe family dynamics. But for other listeners that might be out there, that might be the first generation, like your grandfather was, and they're thinking about, how do I approach succession within the family, right? And almost through different stages, right? What if succession is with, it's a teenager coming through college? How do they think about that young person starting their career versus maybe somebody that's, the first generation that started at 60 and the next generation might be in their 40s at this point in time? How would you think about lessons learned for others out there that are processing these?
That's a
this
great question. Yeah. I mean, I'm just a really grateful guy. I mean, I never really thought about this idea of taking over one day. I just kind of felt like I just wanted to work with my dad. And so just been majored on gratefulness, happy is the guy with a grateful heart. Right. And so I was just grateful for the opportunity. But, as my dad started nearing retirement, it became evident that there was going to be an opportunity for me to take over. And, I wish I had some like great slogan or, theme that I lived by through that. But honestly, and to this day, probably the thing I think about is like, I just want to be doing it better than the guy that was before me. Like I just, I feel a tremendous amount of ownership and responsibility to do it better than the guy that led it before me. And that's my dad. And again, so probably the thing that's driven me is just like, hey, how can I be better? I was given something that I didn't deserve. Very grateful. But how can I be doing it better than the guy behind me?
And so, but even that posture, right? So if only 4%, let's just use that number, right? 4% make it to the third generation.
I heard 8%, but I'll take 4%.
So yeah,
Sounds
so
better.
4 to 8. We'll come out of that range. Still very low probability that family businesses make it through multiple generations that way. And a lot of different reasons. And then you have sayings that are out there when it comes within family wealth of, shirt sleeves to shirt sleeves in 3 generations, right? That just whole concept of the first generation makes it, the second manages it, the third spends it, and the fourth has to start over again. Mm-hmm. There's different dynamics that come into that, but you're a third generation, at I still consider a very young age, right? Of our mid 50s at this point. And you're going to work still every day. Yeah. You still are digging in, loving what you do, and you're not resting on your laurels. You're not sitting at home on the couch working or dialing it in. So what is that about you, Dave, that motivates you and drives you so much? Humility's, part of it. Gratefulness is part of it. What else would you say are some characteristics of how you?
I think my dad just modeled some really healthy things. Like for example, we maintain 8:30 to 4:30 office hours today. One of the reasons why we do that is because what my dad modeled to me is, hey, you get in here, you get your work done, and then you go home and you be home for dinner every night. Be with your family. Don't be a slave to your work. Be excellent. Give your guts to your day, and then get out of here, go home. I think back on some of the things my dad modeled, like, I think one of the life lessons I've learned from my dad and through the business and growing up is this, that, who you surround yourself with is a big deal. This idea of, who you're around and who you allow to influence you is a big deal. I think of a couple of things. I think of this idea of, there's a verse in the Bible that says, he who's in the company of the wise is wise, and he who's in a company of fools is in danger. So I think about like my dad and who he surrounded himself with when he was running the company, just really wise guys and really, really smart people that, they weren't interested in growing this thing to be the biggest. They were just like, hey, be profitable, grow every year, try to get better, And so I just watched that. I saw my dad, with people around him and who he listened to and who he surrounded himself with. And I thought, I need to do that. I need to surround myself with wise people and not foolish people. And so I've just tried to follow what my dad has done. And then, when I did go off on my own, there was a little bit of a blessing in that. So I went to work for a large insurance company as a major group underwriter. So I was underwriting large group health insurance policies, large national accounts, companies that you'd recognize today, brands you'd recognize today. I was underwriting their health plans. So when I came to CFM Insurance, we did very, very little health insurance, but it's what I knew. So when I came in, I'm like, hey, we should start doing health insurance. And I'll never forget, I still remember to this day, when I started, we were working with health insurance companies that are no longer in business today. And I remember health insurance premiums, like for a family, being $100 a month for a family. And that wasn't that long ago, right? Yeah. And look at how much it's changed. And it's been interesting. So going back to your question on, how do you transfer generationally? I don't really feel like my dad was, I don't really feel like he was a provider. My dad, I grew up in a very loving home. I had an identity. I knew exactly who I was. I loved my parents. I wanted to please my parents, and have a great relationship with my dad today, and just respect the heck out of him. He's just a wonderful guy. But he didn't really give me. He provided for me, but when it comes to the business, he was like, "Hey, you got to earn it." And so I just really tried hard in those days to demonstrate to my dad that that I can grow, that I can learn, that I could get better, that I could become an expert on something. And then he just got to a point where he felt comfortable transferring ownership and responsibilities to me. And then he stepped back and kind of let me run it for a number of years while he was off. And I'm like, okay, so my dad's still doing great. Not active in the business, but calls frequently and asks how are things going and wants to know.
The success in what you're highlighting, are what I'd say character traits. We talk a lot in the office about character and competency, and you got to have both. Character edges out competency. Is like 51-49. You need both, right? But it's not just great people and character. They have to be technically competent. But if you can't be technically competent and low in character, low integrity, low ethics, so you have to have those in balance. But everything that you just highlighted of what you've learned and what was passed on from your dad in particular versus your grandfather's early passing is values based, is character based, right? And taking the character traits that you brought in to then go figure out and how to learn, because you didn't highlight anything. Well, I was the best underwriter at this. I technically know how to do this, which are all competency type aspects that need to be learned, need to be executed really well, need to be done. But what's made you successful in who you are is the character and the people that you surround you with and their character, and then the wisdom that comes into play there too. Is that fair?
I agree. And, my dad was always, he would always put challenges out there for me. I'll never forget, he came to me a number of years ago. He's like, hey, I think you should really go after and earn this professional designation in our business. And at the time, it's called CIC, Certified Insurance Counselor. And it's a big deal. It's 100 hours of classroom. It's 5 2.5-hour handwritten essay exams. It's not easy. And he's like, hey, I think you should do this. And I think you should start, I think it'd be really good for you. And I was just thinking, I don't know if I really want to do that, but okay. So he just kind of threw the challenge out. And I'll never forget, right around the corner here, I went to my first class and sat through it and then took the exam and failed the first exam. And I was like, what? And then I learned like 78% of the people fail the first exam because they don't know how to take an essay exam. And so I took it again and I passed, but it took some coaching and it took some learning. And but my dad's always like, hey, now once you start that, you need to finish, so start well and then finish strong, work hard and finish strong. And so, maybe back to some of the character and principles that I've learned is just, work hard and finish strong. And so I remember finishing that, and I remember just being really proud to tell my dad, hey, I got it. I did it. I earned it. And see that it's on the wall. And
right.
So my dad's been good at setting goals and kind of putting challenges out there, and not in a managerial way, like, hey, I'm your manager, I'm gonna make you do this, but just more in a, hey, I think this might be good for you, and just the way that I got brought up, I responded to those things. I saw value in those. I saw wisdom in that, and I trusted my dad's discernment.
Yeah. Well, your dad can't take the test for you. You got to take it and pass it on your own, right? Yeah. And so we'll call inner office politics, or inner office gossip, or inner office, right? When you've got the family and you're coming in and your dad trying to set you up for success by starting you at the reception desk. What are some of the items, if there's other people that have got family businesses and are bringing in the next generation into their business, would you encourage them to be sensitive towards the rest of the team, right? Because of the rest of the teams, right or wrong, the predisposition is starting out of saying, okay, next generation is going to get advantages that traditional employees.
Really good, great question. And personally, I think that the character of the person is really a big deal, right? I mean, I tell my family all the time, like, hey, blood doesn't make you family. Blood makes you related. But, family are things like love and loyalty and trust and things like that. And so, I just feel like, I just tried to earn the trust and the respect and the loyalty of employees. I never used my position, if you will, in the company. It's just not in my DNA. And my dad, and I think I learned a lot of that through sports. I think kind of what helped shape me is we've talked a lot about home, we've talked a lot about family and growing up, but I think through athletics, I've learned a lot of those life lessons too. You just in football, played football through college and just learned some really, really valuable life lessons that you'll never learn in a classroom. You'll never learn in a business, that just transcend and are so applicable to, to work. And one of them is, the way I would put it is preparation eliminates fear. So this idea that, hey, if you're fearful or anxious about something, whether it's, a meeting or a presentation or a project, or, if you're prepared, right, you don't have to be afraid of it. So just work hard and just prepare and be ready.
Right.
And so
do your homework.
What's that? Do your homework. Yeah. Put your work in. And I think, and I kind of always knew that, but, just really, really learned that valuably through football. And I think one of the things that it did is it just kind of helped me focus a little bit, because you can know that, you can do that, but then you can look at people around you and you're wondering like, hey, are they doing the same thing? Are they doing the same thing? But, what athletics taught me is don't worry about those people. Worry about yourself.
Play your game, play your position.
What you're doing. Because the guy next to you is depending on you to do that. And you're depending on the guy next to you to do it. And it's this kind of, it's this love thing, right? Like I'm doing it because I love the guy next to me. He's doing it because he loves me and we want to succeed. And so I kind of just came into the business kind of with that kind of mentality. Like, hey, if I just, keep my head down and I worry about myself, I don't worry about other people, and I just do a good job and I'm prepared. And, and I think in a way that's rubbed off. I think people in my office have come to know that about me, and I think they just understand like that's just sort of the DNA of our company. And so that's kind of what people do is they just kind of trust each other and be prepared and do your work and come prepared. And because if it's about you, it's not a big deal, right? But if it's about us, it's a big deal.
Yeah. So 95 years in the making. How would you describe the culture then of the CFM team?
That's good.
And what you've developed now, because now you've been the president for how long?
Well, 2011. So what does that mean?
12 years.
Yeah, 12 years.
12 going on 13 years that you've been the president, let alone the vice president, and been around the organization for even longer.
Yeah.
How would you describe now the culture and the stamp that you're putting on it that might have been different than from your father?
No, it's really good. And we're actually, it's very relevant because we're actually going through some things right now that we're learning. And so historically we've been just a really, really stable, office environment. I mean, our staff, our average tenure, maybe 13 years, so we have people that come and stick with us for a really, really long time. And, but we've had some people recently, that have been with us for a long, long time, and, it was just time. And so we've had to replace some people, and it's really one of the first times organizationally where I've had to deal with this idea of, performance and building new teams, because the way I would describe it is we built a fantastic team, and then those people were ahead of me, right, in terms of their tenure there. And as they retire and move out, we got to bring in some new people. And so we're sort of we're in a little bit of that tension right now where, we're having to do that. So I'm still learning a lot, but I would say historically our culture has been very family-like, in the sense that we just want to honor people's time. So come to work, give us your best effort while you're here, and then go home and don't work. We're hiring people now, and what we're learning is that these people that we're hiring, they're working 60 and 70 hours a week. They're working till 10 o'clock at night and weekends, and they're like, you mean I don't have to do that? Or like, well, everybody has to work. So like, if you need to stay and get something done, you got to stay and get it done. But our expectation is that, that you would come give us your guts for 7 or 8 hours, and then, be willing to make sure you're ready for the next day, and then get out of here. So yeah, I think our culture has been very stable. And I think what we're learning now in bringing in some new, some newer blood is, they kind of have to learn that, right? They kind of have to learn our DNA, and it's not like it was where they were before. It's more of a, hey, we're for you, right? How can we help you? And we want you to succeed. And I don't think they've been experiencing this in other workplaces. And so I think our culture's, been dominated by kind of this idea of family and support and for one another. And, if it's for us, it's a big deal. If it's for you, it's not a big deal, and I think we're just bringing in some fresh blood to learn that now.
So when you have the culture of the team that you're developing and continuing to develop into the future, the aspect then of the people that you turn around and serve, right? Because you end up with a certain culture that also becomes attractive to some people. Every culture, right? It attracts certain people, and it repels other people. And that's okay. If anybody tries to be anything to all people, they're probably going to fail, right? Because they're going to disappoint and repel everyone. So if you were to take that description of the team that you have, what kind of clientele does that attract, right? As we start moving from the family business and the generations and where you're at towards the people you're serving, which are also a lot of entrepreneurs.
No, it's great. Yeah.
Who's attracted to working with CFM Insurance?
Yeah, and a lot of the stuff I'm sharing with you, isn't all original to me, but one of the things we've tried to live by is this idea of people over projects. So in other words, people matter, right? And so projects are important, but people are more important. And so this idea of teamwork, how can we help one another? So if you come into work and you've got a lot going on, you're overwhelmed, hey, how can we pitch in? How can we so there's things to do, but it's about you as a person. So I think as it relates to customers, the way I would describe it would be this way. In our business, you got to have a lot of technology, right? You got to have systems, you got to have things that you give to clients that they're looking for, that serve them and help them. And that all costs money, and that's all great. But if you're just a technology company, what are you? So what I like to tell people is, we have technology, but we're technology with a soul. We are, there's real people behind this. It's not a call center. It's not a service center where you're calling in and talking to one person one day and talking to another person another day. It's about relationships. And so we try to put people over projects. And so we like to think that as a client, that when you call in, and that, Courtney or Lisa or Tracy is your account manager, or Dave's your agent, or Matt's your agent, and who to call, that you're going to get met with that kind of a response that,
Yeah.
It's you over a project. And
Yeah.
so, yeah.
Yeah. And so the people that want to engage then want to engage at a relational level.
Yeah, I would say so.
Right. And so when you talk about that character and competency,
Yeah.
when people evaluate CFM, right?
Yeah.
You have someone that comes in new and they're evaluating CFM. How would they describe the character of CFM and then the competency that they would observe?
That's great. Yeah. So I like to say, before I answer that, just this kind of, I would say our sweet spot is we sort of come up alongside the privately held business owner, and we're sort of the one relationship they have to manage. I mentioned kind of the 4 areas or departments, personal lines, commercial lines, benefits, specialty products, which includes like the life insurance. And so like, if we can come up alongside the privately held business owner, they don't have to patchwork this thing and piecemeal it out to 4 different like we can be the one relationship that they manage. And so I think that's refreshing.
Yeah.
Optimally, that works well, but then, like we can do the insurance piece, but then there's other pieces that come into play, like, like what you do, in accounting and legal. And so what we try to tell clients is, hey, you need 4 really good relationships. You need a base.
Yeah.
We always say, trust your base, so that, the base is, a really, really good insurance agent, a really, really good accountant, a really good attorney, and a really good wealth manager. And those 4 things are your base. Trust your base. And optimally, those 4 things, they'd be working together and communicating with one another. And, so like, I've just so appreciated.
There's so many times I was about to say, but I'll let you go first.
No, we share a couple of clients, and I've just so appreciated the spirit in what you guys do, because I hear from our clients about you specifically and your organization, how you bring value to them and how smart you guys are. And it's beyond what you normally do. It's not like you're just managing money, but like you're coming alongside them, you're bringing value, and you're wise, and you're providing good counsel. We're just trying to be like you guys, and so this idea of trust your base, get a good base. And so, can we be a part of that base? And then, again, we are not a sales-based organization. And I say that tongue in cheek, because every organization is measuring, growth and revenue and all that good stuff. And obviously you've got to grow, but I like to view our business, like, I think that those things take, and what's been proven to me over in my tenure there is, if we do a good job with relationships, those things really take care of themselves.
Yeah.
And so this idea of, how can we help somebody and bring value to somebody beyond just providing a product? Because honestly, selling insurance is really boring. Like, there's nothing exciting about selling insurance. Helping people manage risk and think about risk and, finance risk. I mean, again, I tell clients all the time, insurance is just one way to manage risk. It's not the only way. Right. I think about, the client that's looking for not a high pressure sale. Like, we're not trying to sell you anything. Like,
right.
And quite honestly, we'll put 3 or 4 options in front of you. And I can think of one example where we had a client that came to us, and I was reviewing his insurance, and he was frustrated because he's like, why do I have to have so much liability insurance? And I'm like, well, because you got a lot of assets, right? And you got to protect those things. And he's like, but why? And so we got into this conversation, and I mentioned estate tax. And he's like, what is that? I'm like, well, like when you die and, the government's going to value your estate, and you depending on how much
the big bill that comes.
Yeah. He's like, no, there's no such thing. And I'm like, no, there is. And I said, you should talk to your attorney about it. Cause that's the other thing. Like, I'm not an attorney. I don't want to play one. I don't try to play one. I'm not a wealth manager. I don't want to try to play one. So I'm like, talk to your attorney. Yeah. And he's like, I hate attorneys. I'm like, well, would you talk to mine? And he's like, yeah, sure. So they connected, and they did an evaluation, and he had a huge estate tax burden, and he didn't even know it.
Yeah. It's amazing, right? I mean, it's because people are heads down, they're growing their businesses. They're doing their thing.
And that's, in that space, high net worth client, they're Mach 2 with their hair on fire. They got tons of hobbies and a lot of fun things, and they're just not mindful. Not all of them. And this one wasn't. And so he's like, well, what do I do? So I said, well, you got 3 options. I said, talk to your attorney, through a bunch of legal work, you could just give it all away, give everything away, so you don't have an estate tax burden. That's option 1. Option 2 is spend a lot of money with the attorneys and spin up a bunch of, grantor trusts and try to shelter a bunch of stuff. Or number three, you could buy life insurance. And I don't care which of those three you do, just pick one and tell me which one, you're going to do. And so he thought about it and got back. He was like, let's do the life insurance. So, I wasn't interested in selling him a life insurance policy. I was just interested in helping him like solve his problem. And the problem is he had an estate tax burden. And so it's like, hey, this is one way you can do it, but it's not the only way.
Well, and that's where back to the different parts of that professional team and how that operates. Because that's where we spend a lot of time with people. How do you model this out to go through those choices so that when they go to the attorney, it's here's my preference, because I've looked at how do I keep my liquidity? How do I gift it? When you say give it all away, people think then it's just charitable gift. Well, no, it's an estate gift that can be moved outside of your taxable estate, continue to grow for future generations.
That's right.
So when you're giving it away, people confuse sometimes gifts being charitable versus estate across the generations. And so then modeling
you're talking about the stuff like that's why they need to talk to you.
Right.
It's like, hey, you've got these assets and, so you've got options. Insurance isn't your only option, and you should make sure you're triangulating or coordinating, a good plan with the help of, 4 individuals and trust your base,
right.
So.
Well, in this where insurance, especially for entrepreneurs, they're growing their business fast, and it's completely illiquid. Right. And they haven't gotten to the point yet where they're taking distributions out and creating liquidity for themselves.
That's right.
So now they have it all illiquid.
Yeah, right.
And then where do they get the liquidity? And if that proverbial bus came along,
that's right.
This is where life insurance
exactly
trusts
the
are
scenario.
great.
This guy had no debt, had tons of assets, but they're all highly illiquid assets. And it's like, hey, if something happens to you and your wife, and they were just sitting around and like, hey, if that plane goes down, like your kids are going to have to fire sale everything just to pay the estate taxes. And so have a better plan than that. Right. And I don't care what your plan is, but make sure it's better than that.
Well, because people's plan, everyone's got a plan. They just don't know what it is. That's right. And their plan is you're going to let the state decide. Yeah. You're going to pay the tax bill, and they're going to be forced into doing things. So everyone's got a plan.
That's not a good option.
It's not a good option, right? So why not be intentional about it? And yet it's you said it earlier, right? The tyranny of the urgent always trumps the important. And these are all very important items, but it gets lost in the day-to-day, the day-to-day shuffle.
That's right.
So when you come alongside of an individual, you were sharing another story too. So if I go back to my GE Capital days, right, we always talked about risk in 2 buckets, back to probabilities and statistics class. On the statistics side, well, this is where you get into portfolio theory and financial markets and variability and how you manage risk from a financial market viewpoint, both for liquid and illiquid markets, public and private markets. But then on the probability side, well, probability is what drives the actuaries within insurance world to say, here's the probability of all these different things potentially happening. You hope that they don't happen in terms of what the need looks like. But then you're back to how do you manage that risk? And when I, in my very pedestrian way, tell people, well, you manage risk if you get a forecast where it's going to be rain. There's a probability of rain coming.
That's right.
It's 50-50. You can choose to not drive out there. You can choose to bring an umbrella. You can choose to change. You make decisions, or you look at it and say, if something was to go wrong, I don't want to take this on. I want to finance my risk. I want to transfer my risk. I have car insurance if I slip on the ice and hit somebody.
That's right.
So I can go through that process of doing that. So it really gets into, it is all about risk management on both sides of what we do, how we manage financial assets.
It's not an insurance question. It's a question of risk, and everybody has
absolutely
different appetites for risk. I mean, one of the coolest things, one of the newer things that's out there in the insurance world are these large deductible credits now. So like I could go to a high value homeowner and say, hey, why do you have a $10,000 deductible? Why do you have a $5,000? Why do you have a $25,000 deductible? There's these things in there now where you can buy, $50,000 and $100,000 deductibles. And it's not just like, hey, I'm staring this big deductible in the face, but it's literally like, hey, if you have a loss that exceeds that deductible, we'll waive the deductible. And it doesn't even apply to you. But if you have a small loss, like that's on you. Yeah. So there's just things like that within policies today that, people can be looking at that just makes so much sense, especially for, folks of, that would fall into that high net worth category.
We had talked about an individual in a case, so I don't want to put words in your mouth, of going through how individuals should be thinking about risk, and how they should be thinking about insurance as a tool in the way that they're managing risk within their business. Can you play that story back?
Yeah. So it was a building, about a building owner. Is that what we were talking about? Okay.
Yeah.
So one. I couldn't remember which story, but so I had a building owner that had a 200,000 square foot building that he owned, and he was frustrated with the amount of insurance that the insurance company was requiring him to carry in the building. So when you think about a property insurance policy, it is a replacement cost insuring arrangement, right? So, hey, regardless of the age of this building, if it burns down or gets leveled by a tornado or whatever, if it's a covered loss, the insurance company has to rebuild it. Well, a lot goes into that. It's not just, has nothing to do with market value, right? It has to do with replacement cost. And he was frustrated with the amount that he was required to carry, because he was saying, I couldn't sell the building for half that. I'm like, I get it. I understand. So he was sharing with me, he's like, well, again, he was really hung up on the premium, which between you and me wasn't a lot of money, but he just was hung up. It was a principle for him. And I get it. And I'm like, hey, so he said, he made a comment to me that if this building burns down, I'll scrape the property and I'll sell the lot. That's,
that'd be the plan. That'd be the plan.
And I'm like, well, then why are you buying insurance? And he looked at me like, what do you mean? I'm like, you just told me that you don't really place a high value on the building, and you don't even really care if it burns down, because if it burns down, what you just told me is you're going to scrape the debris off the property and sell the lot, and that's all you're interested in. He's like, that's exactly right.
Because he owned it outright. There was no mortgage, no note against it.
So I said, well, why even insure the building? He's like, can I do that? I'm like, well, sure. So, so he felt like insurance was like mandatory. And I'm like, well, in this case, it's not. It might still be a wise thing for you to consider, but there's, so anyways, he kept the insurance, but it's just interesting. He was just blown away by this, like, well, you sell insurance. I said, yeah. And he's like, well, why are you telling me not to buy it? And I just said, well, it's an option, Anyways,
it's back
everybody's risk appetite is different. I think that's our job, is to come up alongside somebody and just try to assess, what is your appetite for risk? My job isn't to sell you something that doesn't fit what your appetite is, just to say, hey, okay, that's great. Here's a couple strategies. And
right. And for people to evaluate their risk, not evaluate the premium, right?
Right.
So I love the fact that the individual steps back, and when they understand the risk and what their options are, they still choose to pay the premium on that.
Most of the time.
But now their eyes wide open in terms of, okay, here are my options. It's optional that I'm doing certain things. There's certain things that are not optional when it comes to needing
a couple things that are
coverages.
really kind of frustrating in our business. One is this notion that insurance is a commodity, right? As if you and I are going to pour a concrete slab in our backyard and we need to go buy bags of concrete. Well, I can buy them here for this, and I can buy them here for this price, and I can buy them here for over here. That's a commodity, right? Insurance is not a commodity. What I mean by that is, it's never apples to apples. Like insurance company A, insurance company B, we might have a property coverage form, but the coverages within that form are very different. The provisions are different. The premiums are different. So it's never apples for apples. And so, one of the things that's always kind of frustrating in our business is a lot of people try to make insurance into a commodity, and we try to help remind them, like, hey, you can do that, but you should understand a couple other things in addition to that. So that's one. And then this, the other is just this idea that, in my experience, I think people that have suffered a loss and had to rely, on insurance look at this stuff very differently than the person that's never had a loss. So if you ever lost your home and your home burned down, and what that experience was like, and you knew what you needed to lean into and depend upon from the provisions of that policy and the coverages in that policy, maybe you didn't get them all right. And maybe you learned, oh man, I didn't get the coverage I needed here. Yeah. You look at insurance differently than the person that's never had a loss. And so what we try to help people think about is, just, hey, that's an okay perspective. But one of the reasons you have that perspective is you've never had a loss before. So just think about if you had that, how would this have played out, and just think about it that way. So anyways,
from the simplest sense of being in a car wreck, right? An untimely death, a premature passing, right?
That's
and
right.
A widow or a widower not having life insurance is devastating back to that.
Yeah,
that family.
one of the insurance
sense.
companies that's out there, their tagline is, insurance is for, the if in life, right? LIFE, in life, it's for the if in life, so, and that's true. It's, it's the what ifs. And so, so risk management is a process. It's not an event. It's not, hey, Dave, can you give me a quote on this? Okay, I can do that, and I can get a quote, but it's more a process of, all right, before we even do that, let's have some conversations. What are you trying to accomplish? What's the purpose for the insurance? What's the need of the insurance? I mean, I have people call me all the time, like, I need life insurance. I'm like, why?
Yeah.
And they're like, what do you mean why? I'm like, why? Tell me why you need life insurance. Well, I just think I need life insurance. Okay, well, who's telling you need life? And if you want life insurance, we can get it for you. But tell me why. I want to understand what the intent is behind.
Right. What risk are you trying to manage?
Yeah,
what is the risk that I don't know about in your life?
That's right. And I've had people call me that don't need life insurance, and they're like, I think I want some life insurance. I'm like, well, have you talked to your financial planner? And they're like, well, no. I'm like, well, maybe there's something I don't know, but I don't know that you really need life insurance. Talk to your financial planner. If they and your attorney agree that there's a need for it, then call me back. It's just this idea of, let's have a conversation before we rush into trying to put a solution in front of you for the sake of a transaction, because transactions don't really matter.
Let's have a clear conversation.
It's the process that matters. Right? Yeah.
Let's have a clear conversation. So an entrepreneur and go through maybe different stages, right? Mm-hmm. Somebody that's just starting their business early on, as they're thinking about even this topic, right? Because they're heads down creating whatever it is that they're creating. How should they be thinking about risk management from the lens that you have versus somebody now that might be further down the road in a growth phase, adding facilities, building, staff, et cetera? How would you take someone through the thought process overall when it comes to this topic of risk management?
Yeah, I mean, in our business, we talk about a 5-step process. We talk about, identifying the risks, right? We talk about, hey, what are hey, I own a home, I own an airplane, I own a ranch, so identifying the risk and then analyzing what are the risks associated, with that. So fire is a risk, windstorm is a risk. So we identify and then, we analyze and then we try to control. So what are some of the controls that we can put in place? Are your buildings sprinklered? Do you have alarms? Do you have this? Because again, before we even talk about insurance, we got to figure out what is the risk. We got to identify it, and then we got to figure out, how do we analyze it? What's the worst thing that could happen, right? And then how do we control it before we move to the 4th step, which is how do we finance it? How do we finance the risk? Insurance is one way we can finance the risk. And then how do we administer it? How do we on an ongoing basis? So that's kind of the 5-step process. And so we'll just kind of walk through that, and that might be, well, we need to review this annually. It might be, hey, I want to hire somebody to administer that. Okay, great. So somebody starting out, we'll look at insurance like a commodity, right? Like, hey, I'm starting a company. Some people are really surprised to find out how much things cost these days. Like we're in a market right now that's tough. Like it's just,
especially depending on where you're at too. What state you're in, and
premiums are up,
country.
Capacity is down, reinsurance is super expensive. And so these insurance companies, they're up against it. I mean, they're in a market where they're not getting the returns on their investments. So like you pay a premium. And that's the other thing that people don't understand about insurance is it's as much a banking transaction as it is anything. You give a deposit to an insurance company in the form of a premium. Well, the insurance company takes that premium and they've got to set aside portions of it for reserves and make sure they have money. But then they invest the majority of that premium in the same things that you invest in.
Right.
And they try to get a return on that money, just like a bank or, and so, in a market where they're not getting a return on their investment or as much of a return, well, now they've got to make an underwriting profit on the actual policy, right? And so we have markets in the insurance industry, just like you have markets in the investment field, so you have bull and bear markets. We have what are called hard and soft markets. So in a hard market, seller rules, right? So in a hard market, the insurance company dictates terms, and in a soft market, the consumer, the policyholder, kind of dictates terms. And so we're in a hard market, and we're in a really hard market right now. And we've come off the longest soft market in the history of our industry. So we've conditioned all of these policyholders to this point where it's like, hey, buyer rules, right? Like I get to name my price, and that was the case, a couple years, 5 years ago, 10 years ago, a couple of years ago. That's not the case today. Like today, it's seller rules. And so it's a frustrating, reality today. But so people are surprised sometimes today to figure out or to find out how much certain things cost. But just coming up alongside them, kind of taking them through a 5-step process to figure out what's the need, and then just saying how much of this is of a concern to you. I mean, there's certain things that you should just do, right? I mean, there's a lot, like the Illinois says you got to have auto insurance. So like you're breaking the law if you don't have it. So if you came to me and said, I don't think I need that, I'd say, well, I think you probably do. There's a right way to do things, and there's not a right way, and we're going to choose to do things the right way. But yeah, just helping them just think through, these are your risks. We've identified them. Yeah. These are the ones that we think are important. Here's how we would, help you finance and manage them. And, how does that feel to you? And, if they're like, yeah, that feels good, then great. We've brought value. Yeah.
And, 10, 12 years ago, right, people weren't talking about cyber coverage. Oh my gosh. Right. Yeah. And now you would absolutely have to have cyber coverage for any business. So, what else, what's emerging, right? What do you look at as the next decade from what people are looking at as if we were talking 15 years ago?
Cyber obviously is a big one. And the frustrating thing about cyber is it's like, what is anybody doing about it? Like, I feel like at some federal level, there needs to be somebody doing more. But in any case, I think the frustration is people are experiencing these events and these claims, and then literally the response from law enforcement, so like FBI, and they're just like, yeah, well, you didn't need the money, so and it's just like, what? Like, so I think one of the frustrations, I'd love to see, some legislation. I'd love to see at the federal level somebody do something about cyber, because it's a huge problem. And I mean, we've just had some horror stories on the cyber front, and so cyber liability is a big one. And you'd be shocked how many people are like, yeah, I just don't think I need it. And I'm like, and that's one of the basic tenets in risk management is, don't risk a lot for a little. So if I told you, hey, I could insure $1 million of cyber liability for $3,000, or and they're like, yeah, I don't think I need it. I'm like, well, you're risking a lot for a little in that case, and you're kind of going against one of the basic tenets of risk management. So it's just helping people educate, and it's their decision. I mean, we're not going to pressure them into it, but and then the other one, I would say another one that's really big right now is directors and officers liability. So a lot of privately held business owners don't see a need for like D&O and fiduciary liability, and some of these things where maybe a publicly held company or a company that, has a board, and, their board members might be demanding that they carry these things. We see a lot of privately held business owners think that I just don't think I need it. And I think that's I think that's a bit of a misstep. I think there can be real issues with, because you have liability for decisions you're making on behalf of the organization, and you have clients and vendors and competitors that what you do can affect them, and you can be liable for those things. And so I think that's a big one, especially for the type of clients that you work with, because a lot of them will think, well, I don't have a board, I don't have any liability. Well, yeah, you do. You just don't know it. And so
what are some of the fun stories, right? What are some of the most interesting items you've worked with in terms of getting insurance placed? Unique, strange stories.
I can think of a couple. So, and actually this is probably a really good segue, because I think one of the common things that we experience with clients of high net worth is, they're just going, and they're doing things, and we don't find out about stuff
until after the fact.
So it could be I started 2 companies I bought this, and like we don't even know about it because they forget to call us. They wrote a check for it. The bank didn't require to have insurance or whatever. And it's like, oh, I forgot about that. So 2 stories, one on that. So I had a client that bought a very, very expensive sports car, very expensive. And I'm not going to say the name of the car because I don't want to give away. I don't want anybody to trace this back. But he was driving down 53 with this car, and
Chicago suburbs,
right out here, right by Woodfield Mall.
Okay.
He was driving down 53, and he was behind a truck, like a big heavy truck, and the entire exhaust system from the truck ahead of him, like he must have hit something and just dropped off the truck at 50 miles an hour or whatever. Like, so you imagine this truck going down, and he hit something, and like it was probably all rusted out, and the entire exhaust system falls off this truck, and this guy with the sports car was right behind it and ran right over it and just destroyed this car. I mean, this car that he had was this far off the ground, what I'm saying? And it just destroyed. So he calls me, he's like, hey, I got to file a claim. I'm like, hey, no problem. What happened? He's like, well, I got, here's what happened. I'm like, okay, well, which car was it? And he tells me the car. And I'm like, you don't have one of those. He's like, yeah, I do. I'm like, well, you don't have one of those on the policy. He's like, oh, well, I bought it. And I didn't, because it's a really nice car, I didn't really want anybody to know about it. So I didn't want to. He's like, and I said, okay, well, it's not covered. And he goes, well, file the claim under my homeowner's policy. I'm like, okay, now I'm really confused, right? And I said, what do you mean? He said, well, I park my car in the garage, and my garage is attached to my home. So doesn't my homeowner's policy cover that? And I'm like, no.
Wow.
So there's an example of somebody that, that was a crazy story. Like he was concerned about what people would think. He was concerned about people knowing that he owned this vehicle.
The wrong risk to be thinking about.
And so he didn't have any coverage for that.
Wow.
The other one that I can think of is we had a privately held business owner that had a really fantastic business, and they had a massive fire and lost everything. And
in the business?
The business was completely destroyed.
Wow.
And so, we had insurance for the fire, and we had insurance for their equipment. We had, all that kind of stuff. But then they started asking about, well, what about our loss of rents? And I'm like, what are you talking about? And he says, well, I said, you own the building. He said, well, no, we do, but we started this company. We sold the building to this company that we started, and we were renting it back. And I'm like, well, you never told us about that. And so he's like, well, I didn't want it. I didn't tell you because nobody needs to know about that company. Like, it's private. And I'm like, well, here's the problem. We're not insuring that entity on your policy because and we didn't set the policy up to insure your loss of rent. So there wasn't coverage for that. And, so it was a big loss. Yeah. And so, those are examples of people that, think they know what they're, and then we come to find out like, hey, I never consulted with my insurance guy on that. And now I got a problem. So, I mean, I feel awful in those scenarios, but like, we're not clairvoyant. Like, so we'll ask, like, hey, do you own any trust? Have you created any trusts? Do you have any entities LLCs that you've started that? So when we do these reviews and such, we'll ask those questions, but as things change, and they're changing all the time, right? It's just like, hey, be sure to let us know. So those are a couple.
But and as people could we talk about the states, and we've got, clients all over the country. And some states are harder, back to soft and hard markets. So there's a lot going on. California, Florida right now.
Yeah, Florida's a disaster.
So share a little bit more about that in terms of individuals' considerations if they're thinking about, building the next factory distribution center, office, relocating. How should they think about the insurance market?
I don't run into too many business-related geographical issues, meaning most of the clients we work with have their businesses in areas that aren't in those areas. So I can't think of. And
I think you're like, we've got clients in 37 states in the U.S. I think you're the same. You're like at 38 or 39, something like that.
32. We're licensed in 35 states or something. So it's not so much the businesses. I think most of the businesses are in pretty safe areas. Like we have a couple in California that have got earthquake exposure. That's easy enough. where we're having trouble would be a lot of our clients are buying coastal properties, for secondary residences, vacation homes and that type of thing. And historically it's been easier,
or primary residences
or
to get moving out of Illinois here. And,
yeah. Well, and who wouldn't want to, right? But yeah, so I think that's becoming a challenge. And again, we're just in a market where, I was just talking to a client today about a specific insurance company that he's with, and we were having a conversation around premium and why is this premium up 20 or 30%? And so I was just telling him, well, that insurance company, I went to their annual sales meeting in June, and here's what I learned. When that insurance company sells you a $10 million liability policy, they're not retaining $10 million of that risk, right? They're buying reinsurance and they're retaining this much of it, and then they're buying insurance for the rest of it. Well, that reinsurance market has lost money for 6 years straight. And so when the insurance company's renewal came up for their reinsurance, because they buy insurance just like we buy insurance, it comes up every year, that their reinsurer said this: you're getting a 80% premium increase, and your deductible is going from $100 million to $200 million. And those were the terms that were given to the insurance company. Okay, so think about this. So now our expenses went up on that. It's a big piece of what we do, 80%, not by a little, but by a lot. And, oh, by the way, now we're retaining twice as much as we were retaining before.
Yeah.
And so, that sends insurance companies in tailspins, right? They've got to come up with they got to pass that on to their policyholder. They've got to figure out how to do business. And so we're just experiencing a lot of that right now.
Yeah.
Where the reinsurance marketplace is causing pressure in a hardened market, and that's just getting passed on to the policyholder. And it doesn't feel good, but if you really understand what's going on, it's not really a surprise.
Well, and it's those macro dynamics, right? When individuals step back and we talk about, well, gosh, inflation the last few years and what caused that? Well, it caused all the spending and all the printing of money coming out into and through the M2 money supply of cash being issued.
That's right.
Apolitical, because it's both parties that did
totally
it.
Apolitical.
And then how that flows through, that affects everybody. And so when individuals step back and, well, how did inflation happen? It's like it happened because of everything that transpired from policies.
Yeah.
And the risks out there, when the risks are growing and businesses are losing money,
we've had
the reinsurance market goes away altogether. There is no insurance.
I can't tell you how many roofs we've replaced in the area from hail, and it's like, okay, well, do you know how many $3,000 or $4,000 or $8,000 homeowners premiums it takes to pay for $150,000 a week? We have a hail claim going on in the area right now. It's $1.5 million. You know how many premiums it takes to pay for $1.5 million loss?
Yeah.
And so, people, I think historically people have viewed insurance like a warranty, right? Like, what happens when you have a warranty? Okay, something breaks. Somebody's going to fix it, and I'm not paying for it, right? That's kind of the mentality. Like, hey, I bought this new appliance. Now the ice maker's not working. Somebody's fixing that thing, and I'm not paying for it. I think people view insurance that way. Like, hey, this thing is damaged, and I don't want to. And historically, I get that, but I think we've reached a point where I think you need to think about it differently these days.
And so that's probably the another episode then that we'll get together on.
Yeah.
So as we start to wrap up, then you've got family business coming up on 95 years next year, right? Not too far off from the century mark. 6 years from now, when you think about the family aspect of the shoulders that you're standing on from your grandfather, your father, the people in the business, and the responsibility that comes with that, and the work that you do, right, and the individuals that you serve and how you help them think about risk. Then when you bring that together, how do you think about the writing of your own legacy? What do you want your legacy to be each day when you're waking up and saying, if something ended today or ends, God willing, right, 10, 20, 30 years from now, how do you think about your own legacy?
That's a good question. I've received more than I've given. I just feel I don't know. I don't know about legacy. Here's what I am working on a 10-year plan right now. What does it look like in the next 10 years? I'm 56 years old. What does it look like in the next 10 years? I have no interest or desire or plans to sell the company in any way. I mean, we get calls every day wanting to buy companies like ours. I have no interest in it. I have high interest in building. I just feel like we're still building. I still feel like, and I don't mean like for selfish reasons. I just feel like there's a lot of work to be done. I don't feel like I'm done. Like you, I play golf, but you can only play so
once in a while.
Yeah, very, there's certain things I enjoy doing recreationally, but I enjoy what I do. I tell people all the time, I've never had a job. I don't feel like I've ever had a job at CFM. I have a lot of ownership in what I do, and I don't mean equity. I mean, I just feel like it's really important work, and I just love the work.
Yeah. And it's really important, right? This is because there's a lot of people that at least ask me the question. It's individuals, and I speak about first generation entrepreneurial wealth and how that gets created. And it's like, well, we're all a subsequent generation, right? We've all, let's trace that back, and we're all subsequent generations. But from a first generation entrepreneurial wealth, or the people that think like them, and this is where I step back, even in your own family business. Yes, you're third generation from when your grandfather founded it, but you think like a first generation entrepreneur in the fact that no, I'm in the office more than anybody else. I'm growing this business. Here's how we're going to develop this. Here's why, because there's people that need to be served out there in what you're doing. So you think like a first generation entrepreneur, even with
I've never really thought about it that way, but I think you're right. Yeah, I don't. I'm not trying to repeat or copy or just do what people did behind us. I mean, I tell people all the time, if my dad came into our business today, he wouldn't even recognize it. I mean, it's that different since he's left. I mean, this, just what we do, how we do it, the systems we use, the technology he wouldn't even recognize it. And it hasn't even been that long. So, so I just feel like there's always, like, you're always learning, you're always adapting, you're always trying to figure out how do we become more agile as an organization? How do we provide more value? And so, I just, I like the work. I like the work.
Yeah.
So,
and so I encourage you, think about that, the legacy aspect of it.
Yeah.
Of what that even means to you as you're working to serve the people that you're working for. And then what does that mean? The story that we're writing. Recorded a session a couple weeks ago. We haven't posted it yet, but it all gets into story theory and how we're all writing our own stories. And what that means. And it challenged me to go back and go, is my life a movie that people actually even want to watch? Right? Are they inspired by it? Are they challenged by it? Are they engaged by it too? So that's got me thinking about it. So now I'm just telling everybody I talk to how do we think about that? And in some ways
I don't know if they've ever made a movie about insurance, but I'll think about
but maybe there will be. Maybe there will be. David, and again, so appreciate you being in here. Closing thoughts for individuals that are listening in as they think about risk transfer, being multi-generation in the business, no matter which generation they represent. Just kind of closing words of wisdom.
I would just say start a conversation. Start a conversation with your broker, your agent, your insurance professional. Think about starting conversations with those 4 key kind of pillar people that I mentioned: your attorney, your accountant, your insurance person. I mean, lot of things happen when you start conversations. And I don't mean like that we're necessarily going to do a bunch of stuff differently, but I'm always surprised when people don't understand insuring agreements. Like, they buy this stuff, but they don't really understand what it is, and like one of the things that we like to have conversations with clients about is, who's an insured under your policy? And they're like, well, what do you mean? I'm like, well, look at the definition in the policy of who is an insured. So, answer me this question: who is an insured under your policy?
We were just doing that earlier this week, right?
and it just started a conversation. And so I just, insurance can be complicated. It doesn't have to be. I love kind of this motto of simplicity over complexity. We like to try to keep it simple. We like to try to keep things tight. But, just start a conversation. Think through, what risks do we have that, we're aware of, and what risks might we have blind spots on? Because I'm always amazed when I start a conversation with somebody, like they've never even thought about something. And you're like, man, I never even thought about that. And so start conversations, whether it's with us or, somebody you work with that you trust. I think that's a big one. I think this idea of thinking about insurance not as a commodity, but something that you're actively managing, just like in what you do. You're actively managing this. It's not something that you buy and stick in a file cabinet. It's something that needs to be reviewed and refreshed and paid attention to.
Yeah.
I think those are probably the best coaching points I can give, and you'd be surprised if you did those two things, what you'd find.
Thank you again for being here today.
Yeah.
Appreciate it so much, and look forward to continuing to serve the families we serve and doing that together too, Dave. So thank you again.
Thanks, John. It's been a
Happy
privilege.
Thanksgiving to you too, and Merry Christmas, depending on when we release this, timing wise too. And getting this
first,
out.
my favorite holiday, Thanksgiving.
There you go. Thank you again, Dave.
Yeah, thank you.
And for the listeners, if you want to continue the conversation, please shoot us an email at clearconversations@ccpwealth.com. Have a blessed day. Thank you.